The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. Alrighty, we're going to be taking a look here at the DAX, just like we always do. As you can see, we start out with a half-hour chart. You'll notice that we had a gap up and then a just when it completed a Gartley up there, and then it's backed off considerably. If we go to the longer-term chart on the DAX, you'll notice that we're looking at a major three-drive to a top pattern on the daily chart, going back to a 78% retracement of the high from 2015. That has perfect symmetry. As you can see here, you have the 1.27, and then also the ABCD pattern coming in exactly at the 78% level. That looks very, very interesting. Folks, something happened interesting on Friday. I had a call from one of my old customers from, oh my gosh, 30-some years ago when I used to write the Astro Cycles newsletter. And for many years, I did a thing called Trade of the Year. I did it for 15 years. The first 7 years, they were absolute home runs. I mean, I hit 7 home runs in a row. Then we had a break even, and then we had another couple winners. But over 15 trades, over a 15 years time span, we had 11 were absolute huge winners, and we had 4 break even. There were no losers in that group. And basically, you know, it's all pattern related. It has nothing to do with fundamentals. But some of the things that we looked at was the Nikkei when it was trading at around 6,800. Soybean meal down around 140, I remember. They had a special report from Thompson McKinnon, one of the big soybean brokers, saying that the only use for soybean meal would be for the sawdust on country and western bars floor, you know, that type of stuff. It was really, really interesting. Another one was we were going against Morgan Stanley. Morgan Stanley was looking at something in the foreign currency markets with the euro. The euro was trading at about 85, and they thought the euro was going to go to about 50. And those were the ones that we were looking at. I see one of the people in the den remembers it too. So anyway, I found something that looks really, really interesting, and I'm going to be presenting it here probably this week. I'm not sure how the format's going to be. The reason why I stopped doing them is because people would, you know, begin calling me. It would have an up day, that would be good. If it was a down day, that would be bad. Just typical of what you see. But you know, it just got to be too much of a hassle. But this one that I'm looking at this time looks as good as anything I've ever seen. That's the scary part of it. But anyway, we'll be looking at that here. And it has nothing to do with the stock market type stuff. I mean, this is something that people don't trade very often, but it's still pretty liquid, and it does look very, very interesting, though. Okay, moving on to the markets. I want to walk down memory lane here with you just a little bit. As you can see in this Dow Jones Industrial Average and the NASDAQ and all these others, we've made these huge patterns here. And if you'll bear with me here just a second, I'll bring a couple of them up so you can take a look at it. This is the Dow Jones on a weekly basis where we are right now. As you see, we're right up here, this 19,000 and change level, and we'll see what's going on at that level. We'll see what's going on. Yeah, they're making comments in the room about the movie Trading Places that was filmed in Philadelphia and New York, and that is my all-time favorite movie, and it's really a fun place. They have actually a place in Philadelphia It's a bar there, and I can't remember. I think it's called Miss Ophelia's, as I recall. It's in one of the hotels, and they have the memorabilia there from some of the movies, but it was one of the better movies. But let's get back to this market here. This is the Dow Jones. As you can see, this three drive to a top pattern that we're looking at here on the weekly basis. It's a very, very interesting one because it's taken place over the last year and a half. But let's do something just a little bit different today. Let's take a, yep, Eddie Murphy. Maybe that's what it's called. Hey, Mr. Z, Rittenhouse Square, what's the name of the place? Do you remember? I thought maybe it's, I think it's called Miss Ophelia's. But I've never been to it because I don't drink much. But there is a, I'll have to look at that. I think it is called Miss Ophelia's, but I will double check it. But it's all memorabilia about that, and it's very, very interesting. But let's take a look at the, by the way, I don't know if you guys know that, but in Trading Places, Jamie Curtis did a nude scene where they showed the top half, and she made a lot of money back in 1983 when that movie was put out. They paid her $100,000 to show the upper part of her torso. I don't know if you can say that on the TV or not, but who knows? Anyway, she actually lives in Santa Monica, California. She's just like a normal person there. She goes to the market like everybody else. She takes her grandkids to school now. She's very, very, very friendly. We have friends in that area that see her all the time, and she's just a really, really a nice lady. He's just a super nice person. So it's really very, very interesting to see. If she just lost her mother recently. She was Debbie Reynolds was her mother, and Tony Curtis, of course, was her father. But she was a Hollywood starlet from the very beginning. But that's it. Let's get back to the markets. I got to get talking here. All right, let's take a look here, folks. Let's go back down memory lane. Let's go back to the .com bubble. Everybody was rocking and rolling. You remember things like Global Crossing, Sycamore Networks, WorldCom. All these stocks are in Tapioca City now. They don't even trade anymore. But look what was happening during that same type of 6 months period that we just experienced. Look at the three drive to a top pattern that we had in the Dow at that particular time. Now remember, this was the Dow at 12,000, and it never quite got. They were talking about the Dow at 12,000. It never got quite to that level. But look at the three drive to a top pattern that's there, folks. It's perfectly symmetrical, just like the one we have now. We're at the 1.618 expansion, just like we have now. So let's just keep that in mind, because that might mean something, down the road here as we begin to look at some of these things, because it's very, very interesting that we have the whole world that is, interesting to see, what's going on. Now, I'm going to share just a tiny bit of astrology here with you a little bit, just to show you. I might not be able to get it done in this whole section or not, but first of all, let's go back and look at the biggest bottom of them all. This was the March. Let's try that again, Larry. It's July the 5th of 1932. Just 1 second here, and we'll get this thing up here, and the thing will take a look at it. What I want you to see is you'll notice that how many of the planets are all in one area there. Do you see that? It's very easy to see that you have many houses that don't have anything in it. Or even just one or two things. That means everything's clustered into one area. So that's a very important. That was July. The Dow was trading at 41 that day. 42 was the low on the Dow, I believe. And let's take a little break. We'll get back, and we're going to go through memory lane just a little bit more. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS Profile proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and Basil Chapman was kind enough to tell us that the actual low on the Dow was at 40.56. Many of the folks don't remember, but I think there were 16 of the Dow 30 stocks that went tapioca during that Depression era, and I think American Telephone and Telegraph has gone bankrupt twice, as I recall. And if you stop and think how important the telephone has been to us, that's really quite amazing. So it's very interesting. Okay, let's move back here just to show you some of these things I'm looking at with the astro aspects. I put the chart for the oh, shucks, I think I did it. Let's just do it. I put the 1932 chart up. Now what I'm going to do is to show you the really big one. This was the Big Daddy Rabbit from way back in March of 2009. This is about as most bullish as I have ever been in stocks, other than 1982. But as you can see here, everything was lined up in two houses. This was a tremendous number of things happening. We were having a Bradley model occurring at that time, so it was very interesting to see what was going on. So let's just show you what was happening with the Bradley model in 2009. I'm sorry I wasn't able to take out this insert that's in here. I'm not technically adept to do that, but you can still see. I'm going to blow this pattern up for you at the bottom, just to show you to see what was happening at that time. You notice the Bradley model, which is in red, was bottoming right at that time. We had a pretty good Bradley date. Remember, during this period where you see this, let's just blow this up so you can see it a little better, because this is where we had some historical stuff happening in the market, with the Dow having its biggest day down in points and also the biggest day up in points. We just broke the biggest down day in points during the election. We were down 880 points in the Dow. The biggest drop before that was 777 that occurred during that 2009 run down into March of that year. And if we'll take a look here, the next one we want to watch is, we'll blow this up. You're going to see this is the blow up of the time period between the last part of 2008 into March of 2009. You'll notice the little green dots that I have there. Those are, the first green dot was exactly 1.27. From that point, the Dow rallied 1,700 points. Remember, it was trading at around 8,000 at that time. It rallied up to about 9,200. It rallied 17 points, and then it came down just like a rocket to 2,700 points lower, where we hit 64 and change, I believe, in the Dow, which was a perfect 61% retracement of the low from 1982, which was another one of those astro bottoms where everything was lined up at any particular time. So the important part of this one is, if you notice that last swing down, that was exactly 1.618. However, what it did do was it did take out that low by a pip or two the following week before it finally turned, and then it went straight up. So it's just telling you that it's very, very close to see what's going to be going in that lines in that area. So we'll see if that's going to be the case. Now we have to ask ourselves, where are we now? And here we are, one day past Elvis Presley's birthday. I hope everybody had a chance to observe the holiday. And if we'll take a look here yesterday and here's where we are as of January 8th. You'll notice again, we don't have quite the tight cluster that we had in March of 2009 or in July of 1932, but it's still very, very tight. There are 1, 2, 3, 4, 5, 6, 7, 8 out of the 12, 9 out of the 12, 75% of the cycles that are there, all in these three houses. So this means something. I don't know how to interpret it. All I'm saying is it's very, very unusual to be happening along with those other things that we're watching. Now, the next thing we want to do is let's go back and look at 1982. This was after the election, so you can get an idea of what was happening during this time. Just give me a second so I can blow it up so we can see it better. There we go. And 1 second. There we are. Now, if you look at the Dow Jones, remember the Dow Jones stayed between 1,000 and 600, between 1,000 on the upside and 600 on the downside for almost, I'll show you that in just a minute, for almost 13 years, I believe. And as you can see here, with this three drive to a bottom that we had happening on August the 9th of 1982, those were the things that we were certainly looking at. And we'll say it's looking at, speaking of a question. Okay, somebody's made a comment about the outgoing administration. Anyway, if you'll notice here that we had that major bottom there, that was also the bottom in the bond market. The bond market actually made a slightly lower bottom in 1983, I believe in January, very close to this. It was like a double bottom, and then went for 35 years, much like we have in stock. So we want to watch that just a little bit carefully. But let's take a look at what happened all during that time. If we look at the time period, and this is going back over the last 40 years, folks. So we're just going to give you an idea of where we are, showing you some of these cycles to give you an idea that some of the repetition that you have here. Now you'll see the three drive. We looked at the three drive to a pattern back in 1982. Now you look at the one in 1974. 74, you'll notice the Dow went up to 1,050 again. You saw it, how it was in there for 30. See, it didn't break out until 83. So 83 into 65, it was there for 30 years, folks, and that's a pretty long period of time. And then after it took it went straight up from that level. But look at the three drive pattern, how perfect it was. Each one of those drives was 1.27 of the other drive. So these patterns, they don't work all the time, but when they do, but the thing is that we have now is we have them everywhere. We've got them in the NASDAQ, S&P, the Dow Jones, the IWM, everything's lining up. I don't know if it's going to work this time or not. Trust me, I don't know, darling, but if it does, look out. It could be very, very interesting. All right, I wanted to mention to you, if we look at this, what we're looking at now, this is from an old chart that came to my attention from one of our folks here at TFNN. This was someone that was showing you, this was going back to March. That someone was me. But if you'll notice in in 1982, in August, you'll see that we were making that 3 drive to a bottom pattern. You see the blue circles. Those are all perfect. They're perfectly symmetrical. The time down in the A, B, C, D legs are actually equal. And so it's very, very interesting what we're looking at as we see these things. So keep an eye on it because it's very, very interesting to see how some of these things happen. Now, we had a question. I have 2 questions I got to take care of. First, I want to do the question about a Canadian gold stock that someone asked us about. I don't know anything about this. It's a Canadian gold stock, but I wanted to post it just to discuss it a little bit. You'll notice that we've had a pretty good move. We've had a 3 drive to a top pattern. We have a potential double top up there at 70. That's all you can say. It has support at 65 and resistance at 71. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to make a correction. Jamie Lee Curtis's mother was Janet Lee. Janet Leigh and Tony Curtis were married, but I forgot about that. But and her name Lee is Lee, not Leigh. But anyway, that is correct. Thanks for reminding me about that. That goes back a little bit too far here. I want to talk just a little bit here about the Bradley model going back to 1987. As you can see here, we were supposed to be topping up in this area of 1987. What you don't really see is you can see the big gap down that we had in the Dow Jones. It took about six or 7 months to fill that gap, but we had closed that day in the Dow at around 2,200. We opened about 200 points. Well, it looks like we opened about 150. I didn't see any prints there, but 150 to 200 lower. We went down to be down 550 points on the day. You'll notice that it bottomed the next day. It bottomed on October the 20th, but there was so little trading going down that at that point it was just it was truly amazing. Then you saw some swings that we had in here, but the main thing is that it did have this big down move. Whether that's going to happen this time or not, have to wait and see. Now, I was a guest at Financial News Network in Los Angeles at that time. Bill Griffith, who was a friend of mine, and Sue Herrera, who was the director of the show, was actually going with my best friend at the time, so I knew them very well. And then Ron Insana was just getting out of SC in journalism, and he came on board, and they had a great group there. The problem was that FNN was a joint venture between a guy named, oh dear, let's get it working again, Glenn Taylor and Merrill Lynch. And Merrill Lynch pulled the funding, and so the whole thing, it was on for quite a few years. But then what happened is Sue Herrera went to New York and made a presentation to NBC about doing something with the show called CNBC. And sure enough, it's been a home run, and she's done incredibly well, which she's really a nice lady. Anyway, I was on the show about once every 3 weeks and became friends with Bill Griffith. And he's a real gentleman also. But I told him that sometime during 1987, usually between October and November, we were going to see a move down in the Dow of about 300 points in one day. And all I did was I knew that the previous move had been 190 points, was the worst day that it ever had. And so I multiply that times 1.618, bada bing, bada boom, it comes out to 300. I missed it because it was down 555. But it was down big. That was really something that is, you don't want to experience what happened in that time frame. What happened in 1987 was not like what happened in 2008 and 2009. 2008 and 2009, there was still liquidity there. It was wilder than March hare, but it was still, still liquidity. So just keep in mind that these markets can get very volatile. And remember, low periods of volatility are followed by high periods of volatility. So that's another thing, to keep in mind. But, over the past, just take a look here at, just take a quick look here. Over the past 14 years, just look at this long-term chart on the VIX index. Look at this, and the 41-month cycles in there. But look at the volatility. There's been virtually no volatility other than a little bit during 2002, the big thing in 2008, which was the too big to fail level, and then of course in 2015 we had a big move. That was the February low. So really, there's been no volatility going on here. Of course, they're saying now that the VIX index has no use in anybody's portfolio or anything, because it's a indicator of the past, and it's usually done that. Now I wanted to talk just a little bit about the retail stocks. This was published by Business Insider, and if we'll give me a second, this is from Renaissance Macroeconomics, but we'll take a look at this. Is showing you that what's happening to the brick and mortar companies of retail sales. So in other words, these are the people that actually, have a store and they're dealing. It's not like the internet like we have with the Amazon. That's basically it. Now, if we take a look at the stocks that are in the brick and mortar section, you'll notice that this is showing a very, very ominous picture for what's happening. Look what happened in the last week, where we had 32% down move in Macy's. 25% down move in Dillard's, a 27% down move in Nordstrom, and then also Kohl's was down about 30%. That's the only one that I've never been in. I've never been in a Kohl's store before, but I've been in the others. Now, this is usually pretty ominous, but also there is a fact that, some of these stores are, they're behind times. They're not actually doing the, what's going on with some of these things. So keep in mind that this is a very, very interesting situation where we're moving from a situation where people were doing more buying, on retail. These are closed stuff, folks. This is the main thing. It's closed, so we'll see what's going on. Okay, let's just take a quick look at the markets here. We're selling off a bit, and we'll see how this thing ends up here. We're at a very critical level in gold. I wanted to show you folks the gold market because last night I like to watch gold on an overnight basis. And if you'll give me a second here, I will put it up here so we can take a look at it. God willing, and right now she's not, but I'm sure she's going to save my bacon here. Yeah, here we are. Here's what we were looking at here. Last night, on Friday, we came down to a perfect 61% retracement in gold, and as you can see, we had higher bottoms, and it said we should get up to around the 1182 level, which has so far been the high this morning in gold. Whether it gets above this 1186 level remains to be seen, but we're seeing some weakness in the silver market because it is not coming through with like the rest of it is. It's held the numbers. There's no question that it's still in an uptrend, but it really needs to get moving here. And if it can, then you've got a pretty good chance of gold to break out to the upside, and that's what we would like to see because I think the long-term picture makes it look pretty good of what we're watching. So we'll see what's going on. Again, we're seeing a bifurcated market where we have the NASDAQ is still going up and the S&P has been selling off. So again, that's been happening more often than not because the NASDAQ, of course, is really 25 stocks and they're all heavily capitalized because they're very expensive. So we'll keep an eye on this as we go through to look at some of the others. Now we had another question about the Nikkei Dow, and I had to go back and do a little bit of homework on this, but let's just take a look here at the long-term picture in the Nikkei because we'll put this up so you can watch it. The high for the Nikkei was in December of 1989. I believe it was right at New Year's Eve, and the Nikkei they were talking about 40,000. It was like 39.6 or something like that. It never did get to 40,000. Then you could see it broke down to, this was a straight down move pretty much from 89 into 95. Then we rallied up to a 382 rally at 22, and then we went down to a level of 6,000. So this is some of the patterns that you're looking at. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're going to take a look now. This chart that we're looking at right now is a chart from our good friend Ed Carlson up in Seattle. Ed is one of the really smart guys in the business. And what he's doing here is just, you'll notice he's looking at day counts. Basically, these are long-term counts, going back to 1998 and stuff like that. But this is the type of stuff that Bill Ehrman also worked on. But you're seeing a great deal of symmetry coming in here into January 8th and 9th. So I think it's important to keep in mind that, there are people that are out here watching some of these things. If we take a look at the work of our good friend Kevin Murphy out of Nashville, Tennessee, he is a disciple, of course, of Bill Ehrman, who passed away in August. But I thought Bill Ehrman had done some of the best work that I had ever seen. I've only met one person that, and he far surpassed Mr. Ehrman, that has done better work than this. But you'll notice if you just go back over the past, you can see that high from 1970. If you go back and look at these levels where the market was stayed in these really, really tight trading ranges. That was during the 70s. As you can see, the high was in 1976. We've already done this on a shorter term basis for you here. You'll notice that how the market came back and in 1983, the low in August of 1982, and then it pulled back one more time to around 1,000 in the Dow, right around 1,100, I believe, and then it had the big run up into 19. What's amazing, the most amazing thing about this chart, folks, is when you look at the October crash, the worst crash we've ever had, October 19th of 1987. This looks like a little blip. And it's just really, it's really quite, it's quite amazing when you look at that. But anyway, this is what we're watching on a longer term basis, and we're seeing some time counts that look very, very interesting. But believe me, they're just very interesting. So that's nothing else that you can do. So we'll watch it closely, and we'll move on to the next one. We've had a request to take a look at the price of the crude oil again. Crude oil is, hold on just a second here. Folks, we've been talking about the gold and silver market. This market, I'm telling you, is really starting to look interesting in the gold. It really is. It's really got a chance here, to do something. So if we can get it above 1,200, that's gonna light up some Christmas trees along Wall Street. And then we'll see if that's going to be the if that's going to be the case. So we want to watch it very closely. All right, the request that we had is for crude oil. As you can see here, we've had another back off this morning, but the market still looks like it has a chance to hold this level around $52. Below $52 in oil sets up a price target of around $49.50. So right now, that's what it looks like from the crude oil standpoint, that we do have a chance to go higher in crude, but it needs to get above this $55 a barrel level. Otherwise, it's going to be a little more difficult for this market to be bullish. Now, we'll see if the market is going to have a hold on, I'm at the crude oil market, is whether we're going to have a significant correction, because there's a lot of support coming in right where we're trading right now in the crude oil. So keep an eye on that. That's just nothing more than another 61% pullback of the previous high. So the 61% pullbacks have been holding, just like gold and silver were holding. So you want to watch those, because when they finally break, that's when you're going to see something really dramatic happening, and we'll go from that level to see if it's going to be the case. Now hold on here a second. We want to take a quick look at what the overall markets are doing, because my beepers are going off, and whenever my beepers go off, I want to pay attention. We've had some questions about the first support in the S&P. That's coming in right about now, folks. That's going to be a 70% retracement. So let's just do it correctly. Let's just put it in here. Give me 1 second, because this is where we break down from. Uh-oh, I can't do it. I've got a frozen computer. Shut the front door and raise the rent. Yeah, we should have some support around 2262 in the S&P. Whether that's going to be the case or not, we'll have to be patient to find out. I'm going to post this in the room if I can get the computer to be to do its thing, and we'll see if it will. Give me 1 second here. Okay, I tell you, folks, I think this gold's going to have a little trouble up here at this 1282. But again, that's just my opinion, and we all know what opinions are. Here we go. Here's the S&P that we're looking at right now. You can see we completed that big ABCD up there Friday, and then we'll be watching here. You'll see the importance now of this 2262 level. That's nothing more. See, last night, you'll notice that the market went right up to a 61% retracement. Then it's backed off about 10 or 11 points from that level. Really doesn't mean very much, but there should be some pretty strong support at that level to see if it's going to be at that level, to see if it's going to be correct or not. Okay, now we had one other question about a stock, and I hope I can find it. Give me a second here. Yeah, Softy. And then I wanted to cover one other one that looks really interesting, but it's about out of everybody's pocketbook. Okay, here's Microsoft. Let me get the chart up. As you can see, Microsoft has made a 3-drive to a top pattern. You'll notice those straight lines are there. Basically, that's showing you that the high from point 1 to point 2 is exactly equal, much like it was. If you'll see in the gold triangles when it made a 3-drive, those were equal also. You'll notice that the retracements were 61% retracement. You can see the double ABCD pattern. You can see the butterfly pattern. This is telling you that Microsoft could be making a major top in here, folks. So we want to watch this one also for that reason. So keep an eye on that. It'll be very interesting to see what happens over these next few days. Now, I wanted to cover one other one that looks really interesting, but the problem is it's out of most everybody's pocketbook. But boy, for technical analysis, this one is really a home run. This is Priceline. And as you can see here, the symmetry that we've had in Priceline over the last 16 months has been amazing. 20 days up, 28 days up, 96 days up, 96 days up. And now what we're looking at in Priceline is a 135 pattern. Now, folks, I know it's ridiculous, but I just checked, and a $1,400 March put sells for $2,200. I mean, give me a break. I mean, they put so much premium into some of these things, they just can't trade it. So you'd have to flat out trade the stock using about a $30 stop, which would be about 2% of the value of the stock, or you just pass. And I would say we just passed. If this were a $150 stock or a $250 stock, I'd jump all over it. but $1,500 stock is just ridiculous. And not only that, it's hard. It's for some places that don't even have an inventory for short selling the stock. They don't even have an inventory of the stock, so you can't even really do it. But the technical picture is just spot on. It's right on. It just got everything you could ask for. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've been had a request to talk a little bit about the XHB, which is ETF for home builders. Again, you can see there's a perfect head and shoulders pattern up here at the 78% level. We've come down about 1.5 points from that level. So that stock is certainly in a short selling mode. It's been in a downtrend. We've had lower tops, lower bottoms for the past year and a half. So this is one that could have some very interesting moves. We've had a 61% retracement that occurred right around the election. And then, of course, the market had a nice run from that, but it did not get above the July highs like some of the other things that we were watching. Regarding that price line chart, folks, I put that up just to show you the symmetry that's there. But, it's pretty hard to trade a $1,500 stock. And from the short side, sometimes you can't even get the borrowed stock, to make it work. So that's another one that you want to keep in mind, because I think it's important to watch the technical patterns as they unfold. But that's it. And I've had another request here. We'll try to get this one covered. This is one that's very popular. It's certainly a tradable stock as far as the cost, and that is Netflix. You'll notice here that Netflix has made a double top. We did take the high out of December of last year by just a few pennies. And then we've reversed a little bit by about 3%. So that's very, very important to watch that one also. But you can see the gaps that you have in Netflix. I mean, we still got a gap at that level of 110. Now, you notice that 110 level, you notice how it came back and touched the area from way back in April. Those are ones that you really want to keep an eye on, because those offer relatively low risk entry points at times, and you want to be able to catch up on those if you possibly can. So these are some of the things that we're looking at. Remember, we live in interesting times, which is the old Chinese curse. So someone's asking about Priceline Charlie. I don't know what's happened to him, but it's been 6 months and he's never been gone that long. So we're Godspeed that he's okay. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.